Zeta Holdings is a fantastic growth stock for 2025, but definitely also for the long term with great management and asset-light business model and interesting opportunities, especially because they have a strategic acquisition strategy. Now, Zeta Holdings has recently dropped by 50%. This seems to me like an interesting buying opportunity for 2025, but the ride will be very volatile, especially if growth is less than expected. Now, regarding Zeta Holdings, a short report has recently come out with a number of claims. I didn't find it very strong myself, but the stock did drop by more than 50% because of that. The management has made a statement, as you can see here. For that, go to the investors, zetaglobal.com. What I find interesting to show is the board of directors. There are a number of very well-known names in there, such as John Scully, also worked at Apple. The CEO, and is me, David Steinberg. I think he's an experienced man. Not all his businesses have performed well in the past. He has had some misses, but yes, that also makes you a better entrepreneur. Furthermore, you see that a number of interesting positions are being filled by experienced men who have also been with Zeta for a long time. So Steven since 2009, then we see the CEO, TO. He has been called Christian since 2017, the Chief Data Officer since 2017, and there are a few more people who have been with the company relatively early. Also the CFO since 2020, so a fairly experienced team. Yes, major powers, and I all think it's very strategically strong. The downside of Zeta, of course, is that it's a marketing platform. They even position it as an all-in-one platform for marketing. They have done that very well with strategic acquisitions. They also won a number of important deals in the last quarter of 2024, and revenue keeps rising significantly, especially larger clients who continue to stay with Zeta, and that's of course very important for the means of transport. You can also see that the revenue growth is there. Interesting, especially for the recent period. And the target for 2025 is to grow to at least more than 1 billion. The current market value is around 4.5 billion. So the price to sales ratio will be around 4.5. That's not very cheap. Only Zeta can grow further and faster in the future. But because it's an online platform for marketing, especially technology, then you have technological disruption. It could very well be that the platform becomes less relevant compared to competitors for whatever reason, and that's always a risk. So the ride will be very volatile. Monix gives 2 stars. The fair value of SMT is $20. The current price is $18. If we look at a number of other analysts, they are more bullish. In total, there are 15, and they indicate a price target of 37. Looking at Fastcraft's, it's actually a tool to see the price correlated with the EPS growth, the earnings growth, to understand what the potential forecast could be. And this model is quite accurate. Well, I think with the slower growing stocks that have a very long history, so more than 20 years, for example, Nestle has recently dropped a lot and seems undervalued based on Fastcraft's data. But we're here for Zeta. This is a growth stock, and for that, the model is a bit less accurate. So we should take this with a grain of salt. Furthermore, we see the profit growth forecast below. And for some reason, analysts think that the profit in 2026 will actually be negative. Although it's just minus 1% and then a significant growth of 60%. I think that long-term profit growth is here from 2025 to 2027, that could be realistic. The current price to earnings ratio is estimated to be 30 for next year, so the forward to date price earnings. Now, let's say the price to earnings ratio is only 20 in a few years from now, and that growth is being realized, then you still have a positive return, but it could be much more, but also much less. And that is, of course, investing. This makes it very difficult to value Zeta. It's a growth stock. I've been investing in growth stocks for over 10 years, and I actually see a lot of interesting things with me, especially for the strong management, the acquisition strategy that works, and also just the platform asset light earning model, high profit margins and potential. It has a lot of interesting characteristics. Also, if you look at the market value, that's not very high. At the moment, the market value is 4.3 billion. Well, there is almost no debt. That's actually just not very much. And the cash position has now been built up. They also bought back 100 million in shares following that short report. You can also find that here in Zeta's statement. So we bought back 100 million in shares somewhere around this price level. I actually don't think that's very much. Maybe they should have bought back more. Maybe management should buy back more themselves to show what the confidence is. On the other hand, they might be better off investing that money in several initiatives. We'll see, time will tell. I do have confidence in Zeta, so my position in Zeta Holdings is about 5%. However, I bought somewhere around here, so such great timing. I'll show you. Moreover, I frequently share my portfolio updates, so I would definitely appreciate it. If you take the little effort to subscribe and also like the video, that always helps us, the algorithm. And we see here in Zeta Holdings, my position has actually dropped quite a bit, down 28%, so that's not very good. But I'm not worried about it. I even bought a little more after that big drop. Unfortunately, I bought just before that drop, not exactly before it, but somewhere, before it had risen a bit further. So I was up 30% at first, and 2 months later, I suddenly found myself down 5%. But I bought just a tiny bit more. I'm not going to buy more because my position is about 4.55% of the total portfolio, and I think that's enough for a risky stock like Zeta. I probably should have bought a little less and applied more DCA, but that's always easy in hindsight. Judgments. The look ratio is very important. That indicates 0.8, so it seems like the PE is high. For example, also EV to sales or price to sales. It's not cheap. On the other hand, if you compare this to, for example, the trade desk or say Apple Loving, that one, I'll show you, which is currently up 36% for me. Yes, those valuations are all much higher than Zeta, while Zeta has at least the same growth potential. In any case, in the medium term of 2 to 3 years, looking very far into the future is really difficult, but thinking more short term is a bit easier. And then I think Zeta is really after this recent price drop. It can be attractive for long term investors, but again, the ride is going to be very volatile. And a small position, for example, invest 2%, at least it prevents the loss from being painful during big drops. EPS growth is estimated to be relatively high. The forward EPS growth for the next 3 to 5 years, 40% is estimated, so that's very high. At the moment, the factor analysis is a hold. Was it strong for a long time? Buy, but that's also because of and momentum and revisions have decreased a bit, and that happens often. If suddenly the stock drops, is the analyst going to lower the expectations? That's why it's actually more interesting to examine growth stocks on a fundamental level. Strong management, good earning model, interesting strategic initiatives. When the market hasn't really spotted the growth stock yet, that's the kind of stock we try to find the most. But Zeta no longer falls under that. Unfortunately, but we find enough of them from time to time, and we share those through the channel. So subscribing is greatly appreciated. Then you'll be the first to get these new updates. Look, the profitability isn't so positive at the moment, but it's really a good stock. So it's just now moving towards the curve to positive. So this can potentially rise very quickly. That also happened with Uploving. And if it goes the right way and they suddenly start making a lot of profit, then price will rise sharply. And once again, with a market value of 4.5 billion, can Zeta easily rise much faster? If they manage to retain their customers and grow the current customer base, then they're really doing well. And then also new customers supplementing, yes, then it's a promising company to invest in. The free cash flow is still positive at the moment, although its net income, so they are making a loss. Only free cash flow is positive. You can also see that the capex investments are relatively very small. That means it's a light earning model. In other words, if you're building a factory and you want to build a second factory, then you're spending a lot of money, but Zeta can easily make a number of software acquisitions that are relatively inexpensive, or even develop some programs themselves and implement that very quickly among all the customers they already have. And as a result, you have a very high return on investment on your initiatives or even strategic acquisitions that are naturally a bit more expensive. By the way, those don't fall under capex, but under acquisitions that you see below. Zexrank gives a hold rating, but they haven't researched the numbers properly. So there's nothing interesting to mention about that. You can see that recently the stock has risen a lot. In 2024, it was one of the better stocks with even a plus of 200%. Now, it's only at plus 60%. The short report came from somewhere around here, and then the stock actually just dropped by 50%. I bought some more here, and then it had risen for a while. Now it has dropped again to minus 40%, or actually even minus 47%. What we see is that there might be a support level here If you believe in technical analysis, I don't do that much myself, but see it in the very short term. Still, technical analysis is a certain factor for the price. In the very short term, because there are simply a lot of players, those trade in the short term, and that can either push a stock further down or indicate that there's a support level. But the question is whether that's the case with Zeta. The Marconi is starting to become more negative, so I'm really curious to see how that goes for the rest. You can see that the stock has actually been listed since 2021, and I think you just have to believe in the management at Zeta and the initiatives they're taking. So, such very well. The fundamental matter of this company, what are they going to do? And will they make more profit in the future? What have they done in the past? And that looks demonstrably good when you look at the data they're showing here. The free cash flow target is, for example, plus $110 million for the coming year. If you believe in that, then I think the valuation isn't too high. It's just very difficult to assess, and everything depends on the longer term growth for, of course, 2026, 2027, 2028, and beyond. And I think if we can maintain that good trajectory with about 10 to 50% profit growth per year for the next 5 years, then this is a fairly good price to get in. But again, keep in mind significant price drops, and it's better to buy after a significant price drop than when it's at a very high peak and probably overvalued. Do you have questions about Zeta? Let me know. I would appreciate it. If you could give a like and subscribe if you find this video valuable. And we're moving on to the next analysis.